All right, guys, look, NFT Shorts, we're back at it again. It's the home of NFTs and cryptos. Guys, look, there's a lot of fear out there. There's a lot of concern about regulations and whether we can survive this situation or not. But, guys, the reality is very simple in my mind. It's so simple. Look, listen to what the SEC has to say. A lot of people are acting as though they have personal vendettas with Gary Gensler, or they're acting as though they know him, they have personal issues with him. Let me make this clear. We have one duty in this, and that is to, of course, preserve our capital, to exercise caution, risk management, all of these things. They're all more or less the same thing. It's called just kind of being aware and protecting yourself, right? Now, people are looking at this, in my opinion, in the wrong way. All right, we really have to look at it in a different way, okay? Because if you really think about it, Gary Gensler and the SEC are giving us clear roadmaps, clear distinctions on what is classified as a security and or is and not, specifically within crypto. So we don't want to act as though this information is just like, they're just causing trouble for us. No, guys, I don't think that's the case in any way. I mean, yes and no, sure, it might cause issues for some of us, but the reality is, if you just listen to what they say and do what they say, do as they say, learn from what they're saying, like the thumbnail suggests, learn from the SEC, then you will be just fine. That's that's how I view it. So I have, some evidence or some details to back up why I believe this, and I personally hope that you will take this information and do something valuable with it, as in apply it. Stop running from these fearful headings and fearful, um, like thumbnails and stuff. Guys, the SEC is clearly telling you what they like and what they don't like. It's so simple. Can we stop looking at this and say, oh, Gary Gensler is trying to do this and they hate crypto and they're trying to attack us, guys, and the ban this and the ban that? Look, yeah, they will ban things that don't deserve to be active because they're too centralized. They don't fit the model of what? Sufficiently decentralized. We said this last time in our previous stream, yesterday. We talked about this. We talked about this even in the previous stream, a couple of days back, a few days back. Guys, it's our duty to protect ourselves, and whether it be school or home, you name it, you've got to follow rules of the road. Otherwise, you get a ticket. That's just the bottom line. So let's stop looking at this Gary Gensler guy and attacking him so much. He may not necessarily be on your side. He may be a grifter. I don't know. He may, be have his have some other intentions and other motives. It's all possible, but it doesn't negate the fact that they are clearly detailing to you what is considered a security and not. Right? So, look, let's get into it, guys. NFT Shorts, of course. Check me out on Twitter. Follow there. Why not? Dropping a couple of good gems, but really just kind of chatting, guys. We have a lot of good fun over on Twitter. So check it out. Here's what we're dealing with today, guys. Learn from the SEC. Stop running from the SEC. To me, there's absolutely no point to run. Run towards them, if anything. Read their documentation, follow what they say, adhere to their rules, and you will be fine. You'll be buying dips as opposed to running scared. Okay? So 100% FUD to me. I think this might be the only live stream. I may be the only person that I've seen and heard on the internet right now that is standing up beside Gary Gensler. Not saying, hey, he's right. Well, no, first of all, he is right in the sense that they make the rules. So, yeah, he's right. But not to say that I agree with his rules, or not to say that he's doing the best by us. I don't know. All I know is that they're telling you exactly what is acceptable and what is not. That's all you need to know. So, let's get over it, right? So, of course, quickly looking at the crypto bubbles, a lot of us love to check out this website. There are many, many different places we can check for this information, but this is different. This is definitely one. I love to see Rose up on this on the weekly. This is great. We're definitely going to get into the Rose chart a little bit later, and just so much other stuff. The thing is, guys, I'm looking at all this stuff. We got Jasmine, we got FET. Guys, the AI narrative is not going to die anytime soon. As a matter of fact, if you ask me, the entire crypto market is AI, more or less. More or less. So we got to make sure that we are looking out for these narratives, but understand how they integrate. with the other cryptos. It's not as though it's just this standalone narrative is AI. No, 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 guys. AI is pretty much everything that's in Web3. Everything in Web3 is going to have something to do with AI. I mean, realistically, everything that has to do with a computer is going to have to do with AI at some point in time, eventually, right? But cryptos are the best place for that. NFTs, metaverse, all of that stuff. When you're in the metaverse, you're chatting to somebody. Who are you chatting to? Is it an AI? There are just, guys, so many opportunities here. So let's not get too distracted by what we're hearing from the SEC and what, no, guys, look, realistically, no, it's our chance, it's our opportunity to see something new, to just, you know, new opportunities. That's all I'm going to say, right? So let's dive into a couple of other options, a couple of other items. Let's get a quick market update. Let's take a look. Of course, Bitcoin right now, we're coming down. The reality is we're coming down. I don't know. This is Bitcoin on the daily, and I've got some lines here, some levels here that I'm watching. And I really did think that Bitcoin was going to start making a move towards the end of this month, towards the middle of this month, but that's fine. We may just have to wait a couple of weeks. We may have to wait another month or so. That's okay. If Bitcoin drops down to this area here, like the 20,000, 19,000, that would bring Bitcoin. Let me get let's say like a highlight or something. Um, that would bring Bitcoin down. Oh, that would bring Bitcoin down to about this area here. So this is possible. We could definitely reach this level again. I'm fine. But the question I have to ask everybody is, are you buying at this level? Or are you hoping that it comes down here and then you're hoping that it comes down even further? Let's just be realistic, guys. If we're getting a 20K Bitcoin, that means we're getting Bitcoin just barely above last bull market's high. So like last 4 years, like 2017. So to me, I don't anticipate this thing going too much lower. And if it does, are you going to be standing there with your bags, or are you just kind of chatting and saying, yeah, this thing is going to move down and go down, I'm not buying it now? And then what you're going to do is just buy it when it comes back up again. Anyway, I don't want to dive into it, but remember, this area here are these like value low areas, okay? This is the FTX collapse. And my thoughts on the whole FTX thing, guys, I've said this before. I genuinely believe, I don't really believe this, but I'd rather believe this than to just believe that it was just this guy just trying to scam everybody. Mind you, I'm completely fine believing that if that's exactly what happened. But there's another way to look at it. Even if it's just like this dream of mine, maybe they really just destroyed the narrative of centralized exchanges on purpose. Perhaps our guy Gary just did this on purpose. Everybody's saying, "Oh, Gary, you didn't step in, you didn't do anything, you let this thing happen, you let it explode." Well, did you ever think that maybe this looks good on his record? Just like, police officers might want to catch you. They're hanging around the corner waiting for you to speed so they can catch you because they want to get some bonuses and stuff. Yeah, maybe he wanted FTX to collapse. Why should he tell FTX and those the people around it that were controlling the company to change their ways? Why does he have to tell them when he already said it many times about being sufficiently decentralized? I know that's not the exact reason why FTX collapsed, but I don't necessarily think it's his responsibility. I'm speaking of Gary Gensler and any other SEC affiliates. It's not necessarily their as far as I know, it's not necessarily their responsibility to say, hey, you better stop what you're doing, specifically you. No, if they detail it and lay it out, look, and these guys want to continue doing what they're doing and fail, to me, that's actually looking good on Gary Gensler in some way because for all I know, he's getting bonuses. I mean, I don't know. I don't know. It's just speculation, but I'm kind of done with the idea of just bashing this guy and saying, "Oh, he's so wrong. He's so wrong." I just don't know. Like, who are we to just say that he's just so wrong? Because what exactly? Because what? Because what? Because we don't like it? Because we don't like him enforcing things? We just don't like it? No, we've got to mature. We got to mature. So let's continue on. Let's take a look at this ETH chart, right? Again, ETH is coming down. Are we looking for ETH in this area? I just drew this line a couple of minutes ago, the $14,000 mark roughly. Are we going to see ETH bounce in that area? Are we going to see ETH accumulate in this range? I don't know. I mean, we could see ETH accumulate in this range. I don't know before making move back up. I don't know. It's possible, right? But it could take days. It could take weeks. It could honestly take months. That is one thing we simply do not know. But one thing I do know for certain is that I will not be sleeping on anything called Ethereum anytime soon. Any of these dips, no, 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 no. I'm not the one to be sleeping on that because, I mean, if you ask me, guys, what are you waiting for? Again, I said the same question before. if it dips to a certain level, are you going to pick it up when it dips? Yes or no, right? Are you going to pick it up? Maybe not. Maybe we're just chatting right now and acting as though, oh, the price is going to go down, and I know it's going to go down, so I'm going to wait for the dip, and then it dips, and you're hoping it goes lower, and then it doesn't. What you're going to be doing probably is anybody who's selling right now, these people are capitulating, and they're selling to the smartest money. The smartest money is going to pick this up right down here and send it right up there. Okay, that's exactly what I feel is going to happen. So personally, no, I would rather not be selling any cryptos. I'd rather be accumulating cryptos as the time progresses, right? That's something that a lot of people may be against, but I'm absolutely for the idea of scooping up cryptos, accumulating while we have the opportunity. That is a beautiful thing. Okay, so let's continue on. Um, let's look. So Gary actually has a lot of experience with blockchains, right? This is probably the first. I might be the only individual who has something more positive to say about this gentleman. Again, I don't know him. I have no personal issues with him. I don't really care whether he's a good guy or bad guy. Just tell me what we need to know. Give me the rules and the guidelines and the roadmap, and we'll follow it. That's all I need. I don't have any other questions for this gentleman. I don't need anything else from him. All I need to know is what is acceptable and what is not. Done. Let's take a look at this video because he's talking about staking. Remember last stream we talked about the whole idea of staking, right? And how staking essentially is going to be potentially banned. But to me, that was kind of all spearheaded by just liquid staking. Ethereum, the Shanghai upgrade is coming shortly, apparently within the next, let's say, 30, 40 days, and in my opinion, we're going to see obviously a lot of these liquid staking derivative tokens see some real value. But to me, the reason why we're seeing so much of this FUD about staking is because the Shanghai upgrade is just around the corner. I just believe that's the case. And the better thing to do, the best thing to do for some people for smart money, for people who can manipulate the market, is to bring the market right down into their pocket so they can scoop it up and get their 32 Ethereum. It's so easy for at a discount, right? That's it. That's it. I don't personally anticipate price going down here any longer. It's very possible. It's very possible to see price go down here, but I just think it's unlikely. Let's check out this little description of staking as a service. It is about 2 or 3 minutes. I don't know if I'll play the whole video, and I may, but if I do, guys, bear with me. It might, hopefully it doesn't get too annoying, but check out this description of staking as a service and see what smart money and the average investor and people who are rule followers are viewing. See what they're learning from, because guys, this man has experience in blockchains. We'll get into a lot of it a little bit after, but he has a lot of experience teaching blockchain technology, so he knows what he's talking about. Just maybe he's trying to set us on the right path, the secure path, the path that leads us to compliance. So let's take a look at this video here. It's actually, to me, it's quite interesting.
In the crypto markets, there are various ways to validate data stored on crypto ledgers called blockchains. And one of these ways is called staking. Investors lock up their tokens in escrow and help validate the next block of data. Some stakers are then rewarded with new tokens. Staking, though, can be complicated and time-consuming and can take big upfront commitments of tokens. There's also the risk that you won't get new tokens even if you stake. Thus, crypto entrepreneurs started offering what's called staking as a service. No, not like the steakhouse. Basically, if you transfer your tokens to a staking as a service provider, they take control, possibly pooling your tokens with thousands or millions of others while promoting returns. But here's the rub. When a company or platform offers you these kinds of returns, whether they call their services lending, earn, rewards, APY, or staking, that relationship should come with the protections of the federal securities laws. That means you, the investor, should receive important disclosures. For example, what do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? Are the underlying crypto protocols genuinely creating value on your investment? Or are they just new tokens that dilute the value of ones you already have? Remember, if you have a stake, that's S-T-E-A-K, if you have a stake meant for two and cut it into three pieces, it's still the same amount of stake. Unfortunately, because these staking as a service providers generally are not providing proper disclosures, there's currently no reliable way as an investor to know the answers to these important investment questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto. You see, you're basically an investor in their platform. If it goes under, and we've seen plenty of that recently, you end up in line in the bankruptcy court. That's why it's so important that these companies and platforms comply with the securities law. After all, the securities laws, regardless of what you think of stake or staking, they're good for investors.
All right, so let's continue on, right? So Gary was, in fact, a professor at MIT teaching blockchain technologies. Guys, watch these videos. It's about 10 or 12 hours, maybe even more. Let's see, about 24 hours worth of content, right? So he's creating content on, well, he and the MIT institution, I suppose, have created content that's free to learn about blockchain technologies, guys. This is free stuff. Are we still complaining about Gary Gensler and his contributions to the blockchain space? Is he still the enemy? I I don't know. Like, yes, no, it doesn't actually matter. Are you following the guidelines or are you not? To me, it doesn't matter. So I don't care whether he's right or wrong, or a good guy or bad guy, or is going for his own agenda. I honestly don't. It's so far beyond the point, guys. He's talking about things being sufficiently decentralized. Okay, let's look at this. Top staking tokens by market capitalization. Okay, of course we all know Cardano is probably way up there. I mean, apparently it's number one. People stake Cardano so much. Last stream I showed some statistics on Ethereum staking and how essentially with the liquid staking and the Shanghai upgrade, essentially, Ethereum's staking percentages will go higher. What I mean is the amount of Ethereum that's staked is going to increase, of course, because people can now freely move their cryptos. But guess what? Or their ETH in this case. Guess what? ADA, Cardano, is already liquid. You can stake directly from your wallet. Any wallet, every single Cardano wallet I have is just staking something. 20 Cardano, 100, 200, 500, 1,000, it doesn't matter. You just keep staking and earn rewards and spend it as you wish. Look, I don't know if it gets any better than that, right? Last stream I showed you, Charles Hoskinson's comments on that last Brian Armstrong tweet about staking. So clearly somebody's doing it right and somebody's doing it wrong. By the way, I had actually a quick thought one day about Ethereum essentially just going proof of stake and then being the perfect rug. The SEC just rugs everybody because they find some loophole or something, and they just shatter the crypto market, bring Bitcoin down to, like, 10,000 or 9,000. That's the 11K and pray type of idea. Of course, that's Richard Hart, but that to me could happen if in fact Ethereum staking, okay, maybe not, but it was just a thought, right? Let's look at this. Okay, this is Forbes advisor. Okay, that's like, financial advice. Here we go for 2023. I kid you not, this is 2023. As a matter of fact, this was published yesterday, the same day that this was published. Okay, the exact same day that this article was published. Look at this. February 9th, 2023. check this out. February 9th, 2023, 7:12 p.m. This was posted, and the Gary Gensler thing was posted. I don't know the exact time. Perhaps I could check YouTube and find the details. But look at what Forbes is suggesting. I mean, if I search, they might use the word recommend. I don't know. We'll find out. But here's what the Forbes advisor has to say for the best crypto platforms for staking in 2023. Look, Kraken. I mean, guys, what do you see right here? Kraken's logo. Isn't this like, didn't they just get sued? Okay, like yesterday, today? I don't know. But anyway, let's continue on. Kraken, Gemini, KuCoin, Coinbase, Binance US. These are the top five. Okay. Guess what is interesting about all of these? Okay, again, compare the best crypto staking platforms. Available in 50 states? No, 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 no. Crypto exchange name, coins available for staking. How many? Crypto trading fees. Is there a section that determines whether it's centralized or decentralized? The answer is no. All of these are terrible options for staking. First of all, not your keys, not your cryptos. We talked about it, and as a matter of fact, Gary Gensler spoke about it in the previous video we just watched. Not your keys, not your cryptos simply means when you sign up to an account of any sort for any crypto, whether it's an exchange on your phone, whether it's the desktop application, it doesn't matter. If you only get a password that you created and you don't get 12 words or 24 words or something of that nature to, like, your private keys or a mnemonic seed phrase, if you don't get any of those and you just have a password, I'm telling you, you're at great risk of losing your cryptos. So all of these, yeah, Forbes advisor tells us these are the top five. They go down, they break it down with the methodology. They answer what crypto staking is, and man, this article to me is funny, and I wonder how long it's going to last right here. I mean, it might stay up, they may forget about it, but I'm very surprised. Fact checked by Benjamin Curry. Thank you, Benjamin. These are factual. This is factual information. Yes. Is it the type of information you want to give somebody now that the SEC is cracking down on people and people are spreading tons of FUD? I don't know if this is the type of article we need to be reading right now, but Forbes says it, then we should follow. No, guys, mainstream media, oftentimes we have to disregard what we see and what we hear. All right, so let's move on. Okay, let's look at a couple of charts before we head off for today. Right, I want to look at some charts that look primed to explode. Primed to explode. I think I said that just a moment ago. Yeah, primed to burst, right? Let's look at some of these altcoins that are ready to burst. I think Polkadot is ready to burst. I mean, look at this. We showed it a couple of days ago yesterday. Look at this price. Yeah, it dipped a bit, but it's not dipping so hard. It's not dipping so hard. Guys, it doesn't want to go below $6. It just doesn't want to go there. It doesn't want to touch this $5, $5.50 mark. It's just not interested. The market's not interested in letting it go there. So, will you buy now? Will you buy later? I'm curious. Leave a comment and let me know. Another one I'm looking at, of course, is Multiverse X or Elrond EGLD. To me, this took a big dip, and I showed this the other day. Guys, look, we have yet to reclaim the FTX drop. This area is the FTX drop, okay? Let's just call it this, even though it's spread even further, but pretty much we need to get price back up to this point, somewhere around here, for us to be at pre-FTX levels. That is a good jump from where we are today. That's a 37, 40% jump, guys. That's a great trade. This is why we're in the crypto space, because we're not afraid, right? We're not afraid of volatility. We might welcome it because there are so many opportunities to catch it on the upside and or to catch it as it's going down. Guys, don't sleep on these opportunities. To me, this is absolutely a brilliant opportunity right now. eGold, with the rebrand and all, I think people have lost a lot of interest in them. You could see the price just tanking down here in early June, tanking, before rebounding and gaining some strength. But we're just not up here. So I personally anticipate price reaching about the $60 range comfortably. I could say that comfortably, right? So let's continue on and look at some Cardano. Same deal. It dipped, not entirely the same deal because it pretty much more or less reclaimed the positions it was in pre FTX, right? But it still has some upwards potential because I just don't see this just tanking. And again, if we do see a dip down to 25 cents, 30 cents, will you buy it? Did you buy it when it was down here? I'm just saying, a lot of us probably didn't walk the walk and talk the talk, whichever way. You gotta make a choice, right? Are you happy to grab ADA at 30 cents, knowing that it could go back to $3, or are you waiting for a dip? And then when it doesn't dip and it goes to 57 cents, are you going to buy it at 57 cents, or are you going to wait and then buy it at a dollar? I don't know. Let's continue on. Of course, one of the favorites, Algorand, also dipping over the past few days. You can see that right there. Guys, in my opinion, they're probably just running the stops. Any type of fear they could spread, any type of information they can drop pre Ethereum Shanghai upgrade, they're going to drop this information. They want the media to be filled with all sorts of fear, uncertainty, and doubt because they want your cryptos. They want you to sell to them. Guys, I'm going to show you this article again. It's Forbes telling you the best staking platforms. None of these top five are actually decentralized. Not a single one. Not the Giddy app, like we mentioned the other day, not Aave, I don't know, not Curve, I don't know what, not any staking platform you use. It's all centralized exchanges. Are you going to take your hard earned cash, convert it into cryptos, and give it to an exchange to hold for you? Guys, I really hope not. And there's one thing that's very interesting. Coinbase and Binance, I don't know, guys, they've got some real big issues right now, especially Coinbase. Coinbase somehow is just still sailing and they've got this lawsuit. I'm very curious to know how that's going to turn out. So let's not deal with this too much anymore. I don't want to give the fact checker here and the editor here too much credit for what they're doing here, even though this is completely, it's a great article. I'm sure it's fine. But we're trying to show and exercise the idea of security, um, self custody. This is way more important to me than any type of free money or higher APY or better rewards or no, guys, no, 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 no. Security is number one. So this article to me, though it may be written well, and Benjamin Curry and Farron Powell probably do have good intentions, I will say that this is a trash article. For what it's worth, this is a trash article or trash report and should be avoided by every single pair of eyes that is happens to glance at it. Ignore this. Do not well, I'm not giving financial advice, so I shouldn't be telling you. I'm not a Forbes advisor, but guys, if you follow what they're saying, you are putting yourself at risk of getting wrecked. If Binance goes down, if Kraken goes down, Gemini, Coinbase, but KuCoin, you name it. If you leave your cryptos on those platforms, you as um, an investor, not an accredited investor, just an everyday investor who's got $100, 200, 500, $1,000, you could get wrecked and you will probably not see your funds back. Ask your friend or your family member who has NFTs or cryptos on the FTX exchange. I know a couple of people and they're not getting their money back. They've told me they're so sad. There's nothing they can do. Okay, let's take a look at Atom. Not necessarily the one to buy now, not saying don't buy it. I kind of hope Atom dips a bit, but to be honest, guys, getting Atom tokens below $20 is a serious gift, if you ask me. Getting Atom below $20 is a gift. The utility that this token's providing. See, the thing is, people have so many misconceptions about Atom. They think that's one of the most useless cryptos out there. But guys, let me break it to you like this, right? Like I do uh, in the Discord, or not so much Discord, pardon me, in on the Patreon example, for example, guys, Atom staking Atom earns you other cryptos passively. Because as soon as we start to get the interchain security going, where you stake Atom and you help to validate other blockchains that are connected in this Cosmos ecosystem, you're going to start to get rewards in other cryptos. Now, again, is it sufficiently decentralized? Yes, it is. Am I concerned that Gary Gensler and the SEC are going to crack down on Atom and their token staking? I absolutely do not believe that's the case. I don't think it's going to happen. Will they come down on Coinbase and KuCoin and Binance and such? Probably, like they did with Kraken. They probably will, right? So this let's just be mindful. Watch out for Atom in 2024, 2025. Don't be the person who goes and grabs a couple of Atom tokens at $150. Okay, I'm just saying. I know that's kind of wild what I'm saying, but it's really not. More and more projects are migrating to the Cosmos ecosystem, whether it be DYDX, maybe IOS network. There's so many what injector protocols there. There's just so many blockchains. Canto's up there doing stuff and interacting. We've also got Picasso, Kusama, and such. Guys, there's so much happening in the Cosmos ecosystem. I would not sleep on this one. As a matter of fact, I might want to say something that's very daring. If you're looking for an increased amount of returns, I might consider going for Atom over Ethereum. Maybe, right? I'm not giving any financial advice, but does Ethereum have a 10x in its system in the coming 2 years? Maybe. Does Atom have a 10x in its system over the next couple of years? Honestly, maybe more likely. Does Algorand? Probably yes. Does ADA? Probably yes. Does Elrond, well, eGold? Probably yes. Polkadot, not entirely sure. The token economics are not my favorite for this project, but let's carry on. I got one more for you guys, and it's the same one that I'm always, I've shown this a couple of times, especially in the chat group and stuff. Watch that bounce right off of that $6 mark, right? More or less in my little box here, this yellowish, greenish yellow box. Getting Rose tokens below 6 cents or at the 6 cent mark is a gift. I said this before, guys. It's like charity. Here, take this from me right now and enjoy this this low price crypto that is going to bring so much privacy functionality to various blockchains. Oh, this is a gift to me, right? So I said it last stream. This dip is a gift, absolutely. And to go with that, why not learn from Gary Gensler and the SEC? Follow their rules, follow their regulations. Look at what they're doing, guys, and they're the ones who make the rules. So why would you try to defy that, right? So, let's take a look at this before we head off for today, guys. If you have any questions or comments, of course, do leave them in the chat. Um, and also, if anything, join us on the Telegram. You can find the link right on the YouTube channel right here. Check us out right there, guys. All the best to you guys, right? NFT Shorts again. It's the home of NFTs and cryptos, guys. Blockchain freedom. We're talking about blockchain gaming. I want you all to understand that we have an opportunity to do something absolutely incredible in this space. We have the opportunity to invest in the future, right? To invest in the future. Let's not forget the idea of, again, investing in the future, understanding what the benefits are to what we have. And that is the technology that we have to do research. Please, DYOR, as usual, do your own research, guys, because if we're following all these influencers, let's say, who first of all they're influencing you and they're telling you that this regulator is bad and that regulator is bad and this is good and this is bad and this is bad, guys, we're missing the point. Focus on what matters. The rules are what matter. Okay, that's what matters. That's what matters. It's the rules. Follow the rules and you'll be fine. Deal with cryptos in the most decentralized way you possibly can, and we will most likely be fine. Let the SEC and Gary Gensler lay the foundation, set the plan, show us the roadmap for us to follow, the guidelines, the rules, and stick within those confines and probably make a lot of money doing so, right? So, all the best to you guys, right? NFT Shorts, of course, again, is the home of NFTs and cryptos. Everyone, thank you. Take it easy.